Hi students, welcome back. From my last lesson was about, by the way, I hope you're okay. My last lesson was about the indirect method of the cash flow. Okay, I have a correction to make. In the last lesson, at the end of the last lesson, I mentioned that I would be teaching disposal of asset. However, how can I teach the indirect method without teaching the direct method? My apology. So today we are going to explain the direct method of the cash flow. Okay, but before I go any further, I want to add something to my last video. Sorry, and that is, extend my conversation on the accrual concept. I just want to mention one thing about it. Okay, the benefit. One of the benefits of the accrual concept is that users have the opportunity, like business owners, shareholders, banks, they have the opportunity, or tax department have the opportunity to see before the cash is received, the status of the business. Okay, so the users do not have to wait until the cash is received or paid before they can see the status of the business. Okay, that's one of the major benefits. All right. Okay, let us move on to the explanation of the direct method. Okay, to the difference, I want to make a distinction. The difference, two advantages of the indirect method, right, is that it is very easy to calculate, and number two, the users can see the link between the income statement, the balance sheet, and the cash flow, meaning that they can see how, in terms of the adjustment, why is it different. Okay, those are the two major advantages. For the direct method, the advantage is that users who are not inclined in terms of preparing a cash flow can see directly how the cash is being spent. There's no adjustment in the operating section of the cash flow, so it's very easy for users to see how it is spent, see how the cash is being spent. Okay, all right. Now to move on, I want to explain by illustration the direct method. This is a very short video because there's not much to explain after we explain the indirect method. Okay, the major area in the direct method is the operating activity section, which in this section, if you look closely, we don't have to make any adjustment. We don't have to make any adjustment. We take the cash received from debtors and we put it in the cash flow, the salaries and benefits. Okay, the cash paid to vendors, rent and overhead expenses generally, right? And we deduct them, interest paid, right? Then the income tax paid. Now, this is equivalent to the cash basis in terms of preparing your accounts. This is very much equivalent. There's no adjustment to make. So this is just cash. There's no adjustment to make in terms of your accounts payable, your accounts receivable, your inventory, depreciation, profit or loss on an asset. So, users can easily see how the movements of the cash without any adjustments. Okay. So apart from this area which is not adjusted, the operating section, which is not adjusted, the other parts are similar. Okay. Here you have investing activities, which means any amount expended in purchasing assets. The financing activities, any new amounts received from raising equity capital is included here. And of course, the difference here, net increase, decrease in cash. Then the opening balance is added to get closing balance, which is also reflected in the balance sheet. Okay. There's not much more to say on this method. Okay, and now the third lesson, which I should have said in the first lesson, the third lesson is about calculation of the disposal of assets. Okay, thank you very much for listening today, and I hope you have a great day, and I see you next time. Okay.